the YouTube.
Sliding into Tuesday. Happy Tuesday, everyone. Once again, Chris and Lee. Ask your mortgage questions. Ask your real estate questions.
Ask your questions about life.
Side hustle questions. Ask your dad, what do I do?
Whether or not Ben Shapiro should be rapping and calling out, what's her name? Who'd you call out?
All liberals.
He calls out all liberals for
all
fun.
of them? Like literally?
He called out...
all of them. Lizzo?
No, well, he did call out Lizzo, but he like straight called out, oh, dude, WAP. Who's that?
Cardi B?
No. Was that Cardi B who made that?
Cardi B? Megan Thee Stallion?
No. Who is, I forget who he called out. He called out somebody.
I listened to it
Dude,
once.
I'm trying to, it's good stuff. It's really
repeat.
good stuff. It's a good, I listened to it about 10 times.
Then you should know who it is.
I know, it's coming to me in
What
just
the
a
heck,
second.
man? What the heck
Nicki
is going
Minaj.
Look at that.
Nicki Minaj, what's up? I know I've been telling you, it's been going down. Oh, there we go. It's huge. Big difference. Hey guys, we're about to pull up interest rates. They have gone down recently again. Interest rates have gone down. This is great news. Great news. That means you can get a house. That means you can qualify when you couldn't qualify before.
Yeah, I think the numbers were whatever you were qualified before when rates were at 8. With current rates, I think you went up $80,000.
Is that what it is?
I think I read an article.
That's
on
a lot, man. That's a whole lot. Well, from 8% to 5.25, which is the 15-year fixed right now, insane amount of buying power. An insane amount. And we're actually starting to feel it. All loan officers that are still in the business, and not all of them made it, but all loan officers that are still in the business are feeling the applications come in. We actually have so many applications come in. We had a meeting this morning so that we can deal with corporate and set up a thing so we don't.
For you guys. Absolutely.
So
like Jonathan right here.
Jonathan, we want to help you, man.
Jonathan's like, who do I speak to for advice on getting a pre-approval for a home?
Well, you could speak to us right now on TikTok, and we will advise you. Or you can call us right after. If you need a badass loan, we're about to do a commercial. If you need a badass loan, call a badass loan officer. New American Funding has 2 badass loan officers by the name of Chris and Lee. You can get them directly on their cell phones by either calling or texting this number. Hint, don't text while we're live because we don't answer. Then, after you're done, text the platform on which you saw us, TikTok, Instagram, Facebook, YouTube, or whatever, and we will be happy to help you. But in the meantime, we will help you. The questions live. This is disappearing. Bye.
Also, you can go to the link up top if you're on TikTok or Instagram, and you can, if you don't want to talk to us because you're at work and you don't want your boss to know, you could just on those links.
So here, if you're wondering about buying that first-time home, there's some programs out there, and this is the ones that are just like the loan officers are putting out there, like this is the greatest thing in the whole world. Right now, the big one is what?
What are you talking about?
Home Possible? No.
Oh, California Dream for All.
Dream for All. The Dream for All program. Dream for All. Ryan says, I need $1 million loan. We're going to work with you, Ryan. Hey, so the Dream for All program sounds amazing. If you look on TikTok, it's like the second coming. It's like, oh my God, 10% down. California's going to get you 10% down. They're going to get you 10% down. So let me run that a little bit forward for you to show you what the 10% down comes with.
All of you that are asking questions, we're going to get to you guys.
We'll catch you. We'll catch you.
We'll catch you. Will be answered.
So that 10% down is going to come like this. They're going to go, hey, listen, you want to buy a $500,000 house? Well, Uncle Cali, the state of California, wants to help you. So we're going to get you 10% down, $100,000, $100,000, $100,000. You're like, what? That can't be. And they're like, hey, like the mafia. They're like, yeah, guess what? You get that $100,000, you get that house. Great news. Amazing news. We're in business together. Wait, what do you mean we're in business together? Oh, you think I gave you the $100,000? No. I want it back. I want it back. You're like, oh, wait a minute. What do you mean you want it back? Oh, no. I don't just want it back. I want it back with interest. You know what? Scratch that. I don't want interest. I want appreciation. I want to share in our good fortune as we pay off that mortgage. I want to share in the appreciation of that house. Wait, what? Yes, I'm going to share an appreciation of that house. And here's one more thing. You need to know this. I have a superior position to you, which means if only one of us gets out whole, it's me. I get out. If you don't, so sad, but I truly hope you make some money. I truly hope. Oh, wait, what if you're poor? If you're poor, I might cut you some slack and let you get off a little cheaper. But if you're not poor, I want my portion, I want my appreciation, and I really hope we make money together. This is amazing. So that's kind of the snapshot of the Dream for All program. It is. It's a lottery program. It sounds amazing, but you do need to know all of the caveats as you go into it.
Yep. Same thing with the regular mortgage, guys. I mean, if you don't know how a regular mortgage works, then shouldn't you want to ask us some questions and we'll answer them. Nat, what if you have most of the down payment, but you are short $2,000? How much a month is it a month?
How much is it a month? If you are short to, well, Nat, if you got most, I like that name, Nat. Hey, what's up, Nat? Nat, if you got most of the down payment, you should be talking to a loan officer like right now. Because if you're like just a couple grand away from buying the house, you should already have your profile built, your credit pulled, your income calculated, because there's a lot of things that we have to factor in. Remember, there's 3 major legs to a loan: income, credit, assets. Most important at the beginning is credit. If you qualify, you qualify. If you don't, you don't. If you don't, we have to put you on a path. If you do, the next thing we do is calculate your income. Your income is calculated in a very specific way, depending on how you make your income. If you're W-2, it's pretty straightforward. But if you're 1099, or if you own your own business, self-employed, any of these others, it's a very complicated process to calculate your income. But once we calculate your income, we can now figure out your debt to income ratio. And then the third and easiest obstacle to overcome is assets, your $2,000 down that you were talking about. So the $2,000 down isn't the most difficult part. It's actually the easiest part. We need to get everything rolling forward. Nat, call us.
Yeah. Ryan, you're here every single day, man. We're going to get you $1 million. All you need to do is apply. Give us a call.
That's like wanting to win the lottery and you didn't buy a ticket. You can't win the lottery if you don't buy a ticket.
You can't? Why not? Jonathan, yes, me and my wife make $225,000 a year combined.
Good job.
780 credit score. I used a conventional for my first home under her name, though. So she made $225,000. Is that what you said? Mm-hmm. That's cool, man.
Okay, cool.
Ari, how can I house hack with 0 down?
Oh, Ari, you can. You can. Let's just say you live in the state of California. You live in the state of California and you want a house hack. And you live in Orange County or San Diego County or Los Angeles County. Well, I can go up to $1 million in those counties. $1 million. Well, wait a minute. How do you do that? Down payment assistance program. 4-unit. You must live in one. You must live in one. Now, there are some catches. If you make too much money, your down payment assistance program is not going to work for you anymore. So, if you make like $400,000 or $500,000 a year and you're like, hey, help me out with the 0 down program. No. The 0 down programs are for those that need help getting into the house. But if you're trying to house hack, meaning that you want other people to pay your mortgage, 4-unit, you occupy the primary of the 4-unit, and then we use a down payment assistance program to get you in. Every county is going to have different loan limits. Also, every loan is going to have different loan limits. Conventional is a certain one. FHA is a certain one. USDA, VA has no loan limit.
You're in the Carolinas? South Carolina, I think you said. North Carolina.
North Carolina, dude.
North Carolina. I'm going to be there in the summer, man. We will hang out. Yeah, we can do condos in San Diego, and no, we cannot ignore that $1,000 HOA. So
can we ignore?
So if you're buying $1 million house, the $1,000 HOA shouldn't be a problem.
I love it. I love it.
Shouldn't be a problem. It should fit.
So this is a very complicated business. There are some very sneaky things that happen. Like for instance, builders will drop the price on their house, but they dropped it to the front, not to the back. They'll have to, you pay for the sidewalks, the park, the sewage system inside of what's called a property tax base increase. And they build a bond into the price, so the price looks lower, but the truth is you have to factor in that property tax base increase, and you really are paying it. It doesn't look like you're paying it.
You guys ever heard of Melrose?
Melrose? Who's that?
You guys ever heard of Melrose?
Mr. Melrose or Mrs.?
Special assessments.
Mm-hmm.
That's what he's talking about.
Yep.
He's talking about Melrose and special assessments.
Mm-hmm.
So if you buy a house that's 10 years or newer in a track area, it's probably going to have Melrose. 10 years or older, that's when the bonds start to fall off. Not all of them, but some of them.
So if you got any questions on Facebook, Instagram, TikTok, or YouTube, we're here for you. We're here for you.
I have a credit score of 800, but my wife has a 680. Whose credit can be used on the application?
Ed Weezy. Anybody on the application, their credit will be on the application. Here's how it works. We pull the first borrower. We get 3 credit scores. Throw away the high, throw away the low, keep the mid. It's called the mid operating FICO. Then we pull the next borrower. Throw away the high, throw away the low, keep the mid. And then, if you're legally married, we take the lower of the 2. And that's our operating FICO score. However, there is a new guideline that just came out, probably about a month ago, called blended credit. In certain situations, we can blend the credit. So if you've got a shitty credit score and your wife has an amazing credit score, well, we could blend the credit under certain situations, and you're going to hear about it for the rest of your life.
All right, cool. Thank you, everyone, for the love. Thank you, everyone,
for the shares. We appreciate you for sharing,
man. Please keep liking. Please keep sharing. I already said Ed Weezy, Def Yours. I don't know what that means. User, ADU loans, ADU loans.
Okay, so ADU loans, ADU loans, ADU loans. Yes, they exist. Cal Haffa has a program. They say they will give you $40,000 for an ADU. $40,000. Sounds great. Sounds great. I'm actually building an ADU on one of my properties right now. Like right now. And I looked into the loan. I chose not to do it. To me, it was not worth it. Doesn't mean it's not worth it for anybody. I'm a guy who's hands-on, who's involved in everything. If you just want to hire off a contractor and get it done, and you don't mind paying, that's the better way to say it, paying, then the ADU loan, it's all right, it's okay. The FHA loan anyway,
Vanessa,
Cal Haffa loan.
Yeah, Vanessa, what should you look at when you're a first-time home buyer, like physically the house itself?
Okay, Vanessa. So there's 2 different ways to look at it. One of them, thank you for the hearts. We appreciate all of you guys. Thank you for the balloons. Thank you. Vanessa, you should have a good realtor. The reason is you're going to look at something way different than the realtor's looking at. You look at it from an aesthetic. Hey, my kid's going to grow here. I'm going to grow a garden. It's going to be great. I'll park my car here. That's cute. That's good. That's the way you're going to live. The realtor's going to go around and go, hey, in that room, the roof is a little wider than the room right next to it. Why? Because they had a roof leak. And they had to fix it, and they covered it. Well, let's put inside the contract that I need a 2-year, what's called a roof certification. Guaranteed this roof will not leak. The realtor's going to walk around and go, hey, you see the chipping paint on the corner of the wall right there? That means there's a foundation shift. We should be worried about the foundation. Oh, you see that little stain on the concrete in the garage? That means there was a water leak. Somewhere there's a water leak. So if you have a great realtor who knows how to look at all this stuff, they will literally walk through and look at this stuff. And when you deal with great realtors, you see they do it all the time. In addition to that, you have a home inspector. But the home inspector will only inspect what he's paid to inspect. He doesn't inspect certain things that you don't even know to ask for. But the realtor knows. And there's some things that the realtor that must be disclosed, but only upon asking. And the realtor will know, should I ask this question? And then they will know to get it in writing. Because 3 years later, you're going to say, I asked the question. The judge is going to say, prove it. And you're like, well, I remember it. Nope. Done. You lose. Next.
So, Nat.
Do
medical bills go against your debt to income ratio?
You take that.
So medical bills, we're talking about bills. This is something that hits your credit a lot of times, and it's not a derogatory, it's just a bill. So yes, it does. Just like a student loan, just like a car loan, just like a credit card, it'll be factored into your debt to income ratio. If you're talking about collections though, because this seems to be a common thing where we're mistaking them, we don't have to hit your collections, we don't have to factor in that payment. The collection will affect your credit. The collection will give you probably a lower score. But as long as your credit is good enough, we can still get you into a home and not factor the collection. But as a bill, yes, it's a regular bill. It will be factored.
So New American Funding is putting out the rates right now. If you want to see them live, you can go to the top of our profile. There's going to be a link. Go to Cool Stuff, and on Cool Stuff, you'll see today's rates. And when you go there, you will see 5.25, 15-year fixed. You will see that on the website because I'm looking at it. You will see 30-year 5.5 FHA, 30-year, and a 30-year conventional 5.875. That is not your quote. That is the quote that New American Funding is putting out to the world. In order for us to get your quote, we must pull your credit, calculate your income, figure out your assets, and build your profile, and then we'll give you your quote. Next.
You're correct, Ryan. The rates are different on a condo than a house. They're slightly higher. Not much, though. Not much higher.
Yep.
And here's another thing. You could buy down that rate. So if you have the cash, you could buy it down so you can fit that $1,000 HOA payment. That's one way to do it. Or you could pay down some debt. So we can make it work, man. $1,000 on $1 million house isn't far off. So call us. Pat McCrotch, will you give a home loan on an investment property for AFV?
AFV is permanent fixed value? No. I don't remember what AFV is. Give me a second. I'm thinking about desktop.
Tell us what you mean by AFV.
Yeah, we give a home loan on an investment opportunity. We give a home loan on an investment opportunity. So I'm going to tell you, Pat, right now, if it's an investment, right now, you're only going to be able to go Fannie Mae and Freddie Mac, FHA, VA, USD. They're off the table. And because it's an investment property, you need 20% down. No negotiation on that. 20% down, and you will need reserves. So I don't know what your AFV, I'm sure it has to do with value, appraise something, value. And we go off the appraiser, 20% down, investment property, all day long.
So what does AFV stand for?
I don't know, man. America's favorite videos.
New Mexico. Yes,
New Mexico. What's up,
all
New
day,
Mexico? I'm from New Mexico.
He's from New
Kind
Mexico.
of, yeah. Grew up in Santa Fe. Love Santa Fe. Green chili, the best.
Good luck with that monthly payment, said Nerelda Mendoza.
Everybody lives at a different level, man. I've done loans for people that make $30,000 a month that will never stop making $30,000 a month. Crazy, but I've done a lot of loans for those people.
Rich Explorers, what about porting a loan?
Porting a loan, like, I don't know. That's like, I think porting, you're like building an engine. Porting a loan. I don't know. Rich Explorers, tell me more
like
about
Cash
porting a
song.
loan. Yeah.
Hey Porter.
Hey Porter. All right.
Ryan, Nereda Mendoza told Nereda Mendoza, I know, I got quoted $8K on a VA loan, 0 down. These guys need to do better than 7 or 8. These guys, we never quoted you, Ryan.
We never quoted you. What? What? And by the way, they move. The rates move all the time. All the time.
And 7 on a VA, we could probably do better than that. How good's your credit?
Yep.
Pat McCrotch, how do you take out a subprime loan at 18? Question mark. I don't even know what that means.
So subprime, those loans kind of don't exist anymore. Subprime was a year when the whole world was falling apart because of subprime loans. And they were, prime is nice, sub is less than nice. So how do you take out, if you have a subprime loan and it's at 18%, we refinance it. I think that's what you're saying.
What's 18%?
I think.
Oh, percent.
Yeah,
okay.
18 or 2018. One of the two.
Jose, I got a 600. Will I qualify?
Will I qualify? FHA, minimum starting score is 580. That's the number, but we have to figure out why you got a 600 FICO. You earned that 600 FICO. Either somebody reported something erroneously or you didn't pay something on time. If you didn't pay something on time and it's still current and there's multiples, that may be a disqualifying factor, but the only way we can find out is if you have a mortgage loan officer pull your credit. That's the only way. Can't be freecreditreport.com, your bank, Loan My Bills. Can't be any of those guys. It has to be a mortgage loan officer.
Thank you all for sharing the lives once again. Hardiness.
Appreciate you. Thank you very much. Let the algorithm know we're doing good for you. Double tap, double tap, double tap.
Ryan, no way $1 million with VA is 8K can get me in 7K range, 1 million VA SD. Well, Ryan, if you know better than me, congrats, brother. User, I got a house in September 2023. Interest 7.3. Are you guys aware when interest rates are going to drop?
User 6565. You're asking if my crystal ball knows what days they're going to drop. What days? Listen, user 6565. if you follow the markets and you follow the Fed and you follow what Jerome Powell says, well, the first Fed meeting is actually tomorrow, January 31st. But nobody's making a big deal about it. You know why? Because it's like 98% sure we're going to be on the pause, which is the pause. That's fine. But depending on how you read the Fed notes, there are either going to be 3 interest rate reductions or 6 interest rate reductions in 2024. The Fed has said we believe we're at the peak of the cycle, which cycle up, down, up, down. We're at the peak of the cycle and we're pausing. It's 98% sure that he's not going to drop the interest rates tomorrow's Fed meeting. But March's is going to get crazy because I think it's 60% that our first interest rate reduction will happen then. You should know that the prime does not dictate the mortgage rates. The prime dictates the market, and then the market adjusts, and the mortgage rates are based off the 10-year bond or 10-year yield technically. So we are waiting for it to filter its way through to the 10-year yield. What day? I have no idea. I didn't know that we were going to drop from 8 to 5.25 in January. And the truth is, all we did was get rid of the uncertainty in the market, because usually the mortgage rates rise about a point to a point and a half above the 10-year yield. Lately, they've been riding at 2.5 points. That's why we're 8% mortgage rate, because of the uncertainty. As soon as the Fed said, we think we've reached the peak, boom, 1.5, like that. So my crystal ball works about as good as yours, which is to say, I can't tell the future, but I can watch what's going on in the market.
Veronica, what's a good enough credit score?
Good enough, good enough. Well, if you're rich, Veronica, 500, because you can put 50% down on a $500,000 house, and I could probably make it work. If you're not rich and you're well off, I could probably get away with 580, 3.5%. But if you're really rich, let's pay somebody to fix that credit in case it's not that good.
Okay, CJ Collins, how about for a second home? Is there programs?
Is there programs? There are programs. There are many programs. Second home is a category. First home, primary residence, that's a category. Second home is a category. Investment property is a category. Those are the 3 primary categories. Easiest underwriting is primary residence, because you're going to live there. Even if things go bad, you're not going to move away. Your second home is by definition your second home. Something goes bad, that's the first thing you're going to cut. So in order to mitigate that, they ask for more down payment, 10% down. And they ask for reserves. Depending on your credit score, it's going to be 6 months, 12 months, sometimes even more, but you're going to need reserves. Reserves are PITI for the mortgage payment for both primary and second home.
Oh, I love this. Some
okay, tell me.
Some controversy.
Good.
Jordan Wesley, nobody should be buying right now. Make smart choices.
Oh, we love Jordan. Jordan, we love you. We love you. We don't even agree with you a little bit. Not even a little bit. Like not even a little bit. And we see that you've got 367 followers and no profile. So Jordan, let's give that a little bit of respect here. Jordan, in a little bit, when I was talking about the March interest rate reduction, that could be happening. We don't know. But if it does, we have pent-up demand for 18 months. Best guess, 18 months. Now, if you took that at 30,000 people across America times 18 months, that's a whole shitload of people. Can I say shitload?
Shitload.
All right, dude. There's a whole shitload of people. And as the rates go down, these people start to get into the area going, hey, you know what? I can buy now. And all of a sudden, mortgage applications come in. And then that $500,000 house that you were looking at, you now know you don't have one offer on it. You have 10 offers. And you know what starts to happen? Immediately. Well, if there's 10 offers, I want to move it to 510. 515, and the market starts to go up. This is economics 101. So you cannot change the purchase price that you bought at, because once you bought it, that's what you bought at. That's it. That's all. It's over. But you can change your interest rate in the future. So I don't agree with you, but I do appreciate you getting on here and talking to us.
Well, yeah, but remember how we had a crash in 2008? And they said every 10 years there's a crash. So
Yes.
2018, remember that crash?
Yes.
Oh, we didn't have one.
We didn't
remember
have
that
one.
crash in 2019?
Didn't have one.
What about 20?
Not yet.
21?
Not yet.
22?
Not yet.
23?
Not yet.
Oh my gosh.
Not happening in 24 either.
It must be
Not
coming.
even
It must be
happy.
happening right now.
Keep up the hustle.
Woo!
Ignore the negative comments. Angel, you were right. We keep working on it. Thank you.
Keep telling me bad things.
Yeah,
Thank you, Angel. Appreciate the love.
They hurt
Thank you all for the hearts.
They hurt our feelings, and we go back to our office and cry a little bit.
Yeah, kind of. Daryl, how about New York State? What is the program for first time, and why not much cash for down payment?
Daryl. We love New York. We love New York. I mean, I've been there when the ball drops on New Year's Eve. Love New York. Love it. We don't do loans there. It's the only state in the country we don't do loans in. And that's a lot of reasons, but we don't do loans.
So many banks don't do business there.
There's a lot of people who don't.
You guys need a better government there.
But we do love New York.
I'm going to say you need a better government, but the state's cool.
Yeah, I'm not fond of the governor.
Rich explores to port a loan is to keep your loan on a 1031 and just change the address of the loan, same rate.
Okay.
Awesome.
Yeah.
Subprime loans are now non-QM loans, said user 7404.
Subprime loans are now, I would disagree because during the subprime days, there was ninja loans. So we can get you ninja qualified. Ninja. No job, no income, no assets, ninja loan. Yeah, subprime still needs, you can get away with no job, but you better put in 50% down. The difference during the subprime days is you weren't putting that kind of down payment. The banking industry has mitigated the loss or the risk in those situations by any risky loan. You got to put 20, 25% down. And that's how they mitigate. So it's not a subprime anymore because you have so much skin in the game. Even if you walk away, the bank's still going to be made whole. So I disagree with you, but that's okay. I appreciate you.
There's no pick-a-pays either.
Yeah.
There's no pick-a-pay. So remember pick-a-pay?
Nope.
Where you can have 4 different payments. You can pay $200 a month, $1,200 a month, $3,000 a month, or $10,000 a month.
And NEGAM loans,
doesn't exist.
NEGAM loans don't. It gets a little complicated, but NEGAM loans don't really exist. IOs, so you can make an argument that IO is a NEGAM, but not really.
The DC store. How can I do a refinance having a statement that shows a previous balance but never over 30 days late? So you've never had a late.
Yeah, you've never had a late. So inside of the banking world, they want you to make your payment on the 1st. In order for them to make money, if you make it past the 15th, they charge you like $60, $80, $40, depending on your bank. But that's just for them to make internal money. If you paid it before the 30-day, it never made the 30-day late. And the only one who really knew is you and the bank, and you lost $60. So as long as it doesn't make the 30-day late, doesn't even count.
Yep. Fabiola, do you recommend starting the process now, or is it okay to start about 3 months once I pay off some credit cards?
Fabiola, right now.
Always.
Right now. The quicker you know what your real challenges are, the better off you're going to be. Sometimes people go, hey, I think I'm ready now. They're not ready for a year. Some people say, I think I'm going to wait 6 months. In 30 days, they're in escrow. Happens all the time, but the only way to know is to get the facts in front of you. We will help get the facts in front of you.
I would say buying a house is kind of like weight loss, okay? If you have a goal, when should you start?
Right now.
Always.
Okay, cool.
So Sanchez followed the host.
Appreciate you, Sanchez. We appreciate you very much.
What are the rates right now?
Tatatia. That's fun to say. Tatatia. Orale, tatatia. I don't know if it's Spanish, but tatatia. Right now, if you went to the New American Funding website, and you can do so by going to the top of our profile, clicking the link, go to Cool Stuff, interest rates are right there. You would see that a 15-year FHA is at 5.25%. What? 5.25, 5.25. You would see that a 30-year FHA is 5.5. What? 5.5. And you would see that a conventional is, pull it up, I think it's 5875.
I think so too.
It's 5875. You'd see a conventional is 5.875. Bear in mind, that is not our quote to you. That is the rates that New American Funding Out is putting out to the world. In order for us to get your quote, we need to put your credit, check your income, check your assets, and then build your file, and then we can give you your quote.
Yeah, Rich Explorer said, and the market is over adding to the points to factor in for refinancing. Totally criminal.
I don't know what that means. Do you?
It means that if you're doing a refinance, you want to get a reasonable rate, you have to buy it down too far.
And
you have to spend
a
lot of money.
Got
I
it.
agree with that, Rich. I'm pissed off too because I lose a lot of loans to that.
Yeah.
That being said, this is how the bank is mitigating their loss.
Rich, here's, and you're right. Rich, it took me a second to process that, but now that you put that out, it sounds like you're a loan officer or you're in the business. So what's happening is that they're like, hey, the banks are going, hey, you know how we make money? These people make the payment for 5 years or 10 years before they sell, refinance, or whatever. But we make the money off the payment. But if we put them into an 8% loan and the rates go down in a year to 6%, I'm going to lose that loan to somebody else. So I'm not going to make any money. And if I don't make any money, well then, wait a minute. If I don't make any money, I better make my money right now. So the banks charge you up front, and the refinances are not such great pricing.
If our bank said Chris and Lee on the outside, I'd make it different for you guys.
Bit different.
But it doesn't.
Doesn't.
Okay, what is the interest rate right now at JH30168?
Right now, it's going to be the same thing as 10 minutes ago, which is 15-year fix, 5.25.
Right.
30-year fix, 5.5. Right. If you don't believe me, go to the profile link at the top of our profile and you will see cool stuff. Then go to today's rates and you'll see what I'm looking at right now. 30-year VA fix, 5.5.
D. John Cia, tell me about reserves for a second home.
Reserves, D. So here's what happens. The bank says, hey, listen, you're doing well. You're doing so well, you get a home here and you get a second home in Aspen. So we love that. You're going to need 10% for that $500,000 home in Aspen. I don't think you can find one for $500,000, but your $500,000 home in Aspen. So you're going to have to put 50 grand. Cool. But in the event that you lose your job, we need to know that you can make the payment on your primary house, which is $3,000 a month, and your second home, which is $3,000 a month. So $6,000 a month times 6 months, I need to see $36,000 in an account somewhere. It can be a 401k, it can be an IRA, 403b, T57, KEO. It can be any one of these programs, but I do need to see 30 grand. And the only reason you're getting away with 6 months reserves is because you have an 800 FICO. If you had a 680 FICO, which is just barely qualifying for a second home, well, then we would probably need 12 months reserves because your credit score is not the best in the world. Maybe even 18 months. So that's what reserves are.
Okay, this one this is a little weird. This person's name is the Scholarship Mogul.
All right.
And I love that name. I'm interested in what you do, so it's time for a commercial.
If you need a badass loan, call a badass loan officer. Badass loan officers can be reached at New American Funding by calling the 2 numbers on your screen. This is Chris and Lee's direct cell phone number, and we will help you through anything. This will disappear in 5, 4, 3, 2, 1, bye.
Scholarship Mogul, text me because I want to know what you do. But the question is, I closed on my home in August, and it's not reflected on my reports yet. Is that normal?
Not really normal. Not really normal. Who did you close with? Who did you close with? That's if you're alt QM or you're hard money or you're something that's not the normal part of the system, then maybe. But they're trying to. They want you to either default or take them out. Mm-hmm. So they're making a lot of interest. Good for them. But there's a high risk in that loan that doesn't report.
Yep. Papa Pip. What makes you guys the mortgage guy?
Ah, we love that. What business are you in?
Mortgages.
Okay, guess what mortgage I am?
Mortgages.
And 100% we are guys.
I am a guy.
We're in 100%. So mortgage guys. Yeah, cool. Next.
Fojo Chapel. Chappelle maybe? How do you feel about VA loan? Whoa!
I think it is the best loan in the system 90% of the time. 90% of the time, because if you did a refinance and it's not your first time use, the VA funding fee can be as much as 3.3%, even higher sometimes. 3.6 I think is maxed, but 3.3 is normal. So 3.3% of the VA loan, if you're doing a $500,000 loan, that's an $18,000 to $20,000 cost that nobody else would have to pay, just a veteran. Now, if you're service connected at 10% or more and you have a skilled loan officer, you will not have to pay that. At that point, I think it's better than any loan in the system. Why? Well, 0 down, which everybody knows about. No mortgage insurance. No mortgage insurance. Let me say that again. No mortgage insurance. 100% LTV. 100. Sometimes up to 105, 110% LTV. So, what are the other things? VA's badass loan. That's it's real simple.
Karina asked the same question.
I am a veteran. My dad's a Purple Heart veteran. My son's active duty military. I do a lot of VA loans. You must have somebody who understands the VA loan, because if you get a realtor that doesn't understand it and a loan officer that doesn't understand it, you're going to be discriminated against. I've seen it happen a lot. because the loan officer, the realtor doesn't know. They're like, yeah, you can't waive any inspections. That's kind of true. You can't waive one termite. Why? Because the VA wants to make sure that there's no termites in your house. On FHA, you can waive it. On conventional, Fannie Mae, you can waive it. On Freddie Mac, you can waive it. The VA says, no, we're looking after the veteran. We don't care what the business says. We care about the veteran. So there's also VA non-allowables, which the veteran is not allowed to pay. The veteran's not allowed to pay for the appraisal. Why? Because if this deal falls apart, the veteran gets zero benefit of the appraisal. On every other loan, the buyer can pay for it, but on a VA loan, the veteran cannot. It's called VA non-allowables, or VANAs in the business. How do I feel about it? Big fan.
And Karina Navahar, I think that answered all your questions. She's
Yep.
out of Texas. Thank you, vets. Thank you
Yes.
for your service.
Thank
All
you
of
for
you
service,
that are
yes.
here right now, and the ones that don't hear me, you tell them for me.
All right, cool.
Fernando, California resident, looking for the best option for investment properties.
Fernando, we're here for you. We're here for you. We got DSCR loans. DSCR means that the income from the property services the note, and it's very easy guidelines, but 20% down. All of your investment properties are going to be 20% down. We meet the young kid who, like, he's 20 years old, and he's like, hey, I just want to have investment properties, but I want to do it zero down. You're not living in the real world. That's not how it works. It's not. If you want a straight up investment property, it's going to be 20% down across the board. Across the board. Yeah.
Thank you that are following, sharing, liking, all that love. I appreciate all you guys. Keep doing it. Payo 90 Z99. How much my mortgage would be for a house of $350,000 with insurance and all that? Arizona. Pay it. PAO Z99.
350,000. Well, a lot of it's going to depend on whether you have an HOA on your property tax base. But let's just assume you didn't have an HOA and you didn't have a property tax base. You'd probably start at about 2,400, 24 to 32, somewhere in that range. A lot of factors have to go into that. So we won't know exactly, but there, yeah.
Olson Aldegur. I'm asked, I just got pre-approved. What is my next step? Now, this is a little upsetting to me because
Olson.
you should already know that answer if you had a great loan officer.
Yeah.
You should already know that answer. You did not get pre-approved by us because you would already be on that path.
Yeah.
But the answer is you need a strong agent.
Yeah,
you need to work with strong agents.
Unbelievably strong agents. Let me tell you how we pick an agent. Like we've been in this business for a very, very, very long time. When NMLS first started, we both got our licenses, but we've been in business before that. So that was 2012, by the way. So first thing, we deal with top producers across the country. And let's just say you're in Mena, Arkansas, and not a lot of realtors in Mena, Arkansas. So what I would do is I'd go to one of my realtors who's in the top producer group. They pay $3,000 a month to be in this group. And I would say, hey, can you find me a realtor in Mena, Arkansas? So during their daily meeting, they would go to Mena, they would say, any realtors in Mena, Arkansas need business. And the top producer would go, I do, cool. So they give me that name. Now I already know they're a top producer. Next thing I'm going to do, Lee Duran, I'm going to call the realtor. I'm going to go, hey, my name's Lee Duran, I'm a loan officer, been doing it for a very long time. I may be giving you a client. Tell me how you're going to service my client and what your market looks like. And then they're going to start to sell themselves to me. They're going to say, well, I'm going to take your client out. I'm going to show them the best thing. I'm going to make sure they get this. I'm going to make sure they get that. And then I'm going to say, okay, Kurt, perfect. You know what? I believe you're going to do good for my client because we got you from the top producer group. And the last thing you want to do is soil your reputation. So I'm going to give you my client. Bear in mind, my most important issue is my client. If my client is not happy, I will replace you. And I say that with respect. And they say, well, of course, if they're not happy, they shouldn't be using me, but they're going to be very happy. Now you have a top producer who knows the rules of the local area, who knows property tax bases, who knows the problems, and they know that if they don't treat you right, they're fired. And I'll bring somebody out that fast tomorrow.
All right. You're welcome, Tata Tia. Papa Pitt just found out my wife's credit score is higher than mine, but she has hardly any credit.
Okay.
It sounds like a good problem.
It sounds like you're not happy about it.
How likely are we to get a good interest rate?
So, Papa Pia, a good interest rate. First off, it's a market. So the market right now says the good ones are at 5.25 and at 5.5. But that's if you have an 800 FICO score and you're putting a large amount down, and your DTI is very good, and you're willing to buy down the rate. So that is the perfect score, 104. And Tapatia, we would only know yours after we build your file. Once we build your file, we'll be able to do it.
Heck yeah, and there's a whole lot going on here, guys.
I've got a lot of questions. We're working. Thank you very much on Facebook, Instagram, TikTok, and YouTube. By the way, follow us across all platforms. Occasionally, one of the platforms will say you said something bad, and they'll stop us for a week. It's happened to us a couple times on the different platforms. So we want to make sure that we're still out in front of you, all 4 platforms at the same time. We don't jump from one to the other, all 4 at once. It's pretty high tech. We got 8 screens in front of us. That's why I pointed different ones. Anyway, we're here to help you.
Ben, we know why you're asking the question.
Yeah.
I'm not going to shoot back. I'm not going to fire.
Oh, Ben.
But here's the truth.
Yeah.
Here's the truth. We're not going to pay for our notoriety. You have to pay to be in the guide. We've never paid to be
For those
in the
of
guide.
you who don't know, Ben saying, hey, your production isn't enough to be on the Scotsman's Guide. And Ben, you don't understand. But thank you anyway. We appreciate you, Ben. We appreciate you spending your valuable time with us. We're hoping that we can help you, enlighten you with guidelines and stuff like that. So we're here for you, Ben.
Saren, with $85,000 income and $40,000 down, credit score at 615. I'm assuming the question is, how much can I qualify for?
So, Saren, here's the first thing I'm going to tell you. 615 FICO could be a little bit of a problem, just a little tiny bit. So, if you got that much money down, first thing we're going to do is put you through a credit simulator to see if I can take that 615 to a 620. Why? Because at 615, the only one you really qualify is FHA. Maybe VA, but FHA. So, at 620, you start qualifying for Fannie Mae and Freddie Mac. And I want to make all the loan programs compete for your business because you're going to be putting a lot of money down. So what we want to do is make sure your FICO score goes up high enough so that you can get the best possible loan.
What? Nat, how long does it take to close?
How long does it take to close? If you're a perfect file, 11 days. Perfect file. And that's because we've got federal laws. We have 3-day right of rescission. We got LE for 24 hours, CD for 72 hours, certain things. But if you're a perfect file, 11 days. Most loans, 30 days.
Molina 81, do you guys think that using my home equity to build a business like apartments or Airbnb is a good idea?
That's investment advice, and we steer away from giving the investment advice. Now, I do own an Airbnb. I do own rentals. I do know that these things can make you money. I also know that if you do it wrong, they'll cost you money. So don't just listen to all those great TikTok videos or Instagram videos or Facebook or YouTube videos. You need to know all parts of it because every single one of these is a business. I have a lot of people that I know that got caught up in Airbnbs and they're trying to get out of them. They can't.
Here's the other thing, Molina 81. It depends on you. So here's what I'm going to recommend. Story time.
Okay.
So there's a movie called The Founder. One of my favorite movies all time. It's boring as hell if you can sit through it, and if you're an enthusiast like me, you love it every second of it. But it's about McDonald's, okay? It's about McDonald's.
What?
And the guy, Ray Kroc, a little slimy, but a hustler like nobody's business. Created the largest food franchise restaurant in the world. That being said, if you watch the movie, he leveraged his mortgage. He did. He took money out to build this business, and he became multi-billionaire, and you could probably do the same too. I believe in you, Molina 81. So it's up to you, but watch The Founder. It's a good movie.
And the big thing about that for business is the system's more important than the product. And people say, no, the product has to be great. I'm going to say, okay, cool. Could you go home and make a better hamburger than McDonald's? Could you?
No. Oh, yes. All day long.
Okay, you could make a better one. Could you sell more?
Never.
You can't sell more because their system is more important than their product. Once you understand that, you get business.
Easy why. But if you're over 30% service connected, can you get expected?
Can you get exempted? I think that's easy. If you're over 10% service connected, you are exempt, but you need to have a loan officer who knows what the heck they're doing. Because when you pull the COE, if the COE was pulled at a time when you weren't rated, it's not going to show that you're exempt. And they're going to go through and fund the loan as if you're not exempt. And nobody's going to really know it because your LO didn't catch it and they should have caught it. And your system isn't there to protect you. You need a good LO that understands the VA load. You need one.
Yep. Nate said I closed 9/15. When should I reach out to the bank about refinance steps?
9/15. 9/15 of what year?
Well,
I'm going to assume it's 23, and I don't know what your rate was. So it's all mathematics. it's, hey, if you close and you were at 8% and you could refinance today at 5.2%, that's great. But I want you to look a little further down the road. Chairman of the Federal Reserve, Jerome Powell, says that they're going to be cutting interest rates between 3 and 6 times in 2024. Their first meeting is tomorrow. I don't think it's happening tomorrow. If it does, it's going to be a crazy day. But I don't think it's happening tomorrow, which means your interest rate is going to go down. And if you are at 8 and you refinance to 5.25 today, in 6 months, when it's at 4.25, you're going to be really, really, really strongly encouraged to refinance again. But every time you refinance, it costs you money. So make sure you do this strategically. And if you're in your forever home, let's refinance once and we're done.
I like Ryan. Ryan makes me laugh.
Okay, cool.
So Ryan said, can you get me a $10 million house in Newport Beach with a 50-year fix?
I know who Ryan is.
Well, here's what's funny is that Ryan's like, hey, I can't get $1 million homes with $1,000 HOA, but can you give me a $10 million home?
Yeah, so Ryan, here's the answer. The answer is very simple. Yes, I can. If you are qualified, we go into a category called jumbo. And when you get above $5 million, it's a whole different category. But if you're at $10 million, your down payment is $2 million. Minimum, $2 million. Then we get it to go to the income calculation, and that's a lot of fun. Oh my God. I once did a loan for one of the founders of ZipRecruiter, and he owned multiple businesses, and I was sitting there going, this is insane income. Insane income. Insane. And we got a multi-million-dollar home. So can we do it? Yes, we can. We got a whole bunch of questions on Facebook, Instagram, TikTok, and YouTube. We're here for you. We're going to answer these questions and get you a house in 2024 if you want one.
Yeah. Vote 14 Pedro. What's the average cost to do a refinance on a mortgage?
Usually about $2,000 to $3,000. But if you go to a broker, they can charge you whatever they want. They can charge you $8,000 if they want. If you go to a direct lender, they have to disclose the fees, and it's pretty straightforward.
Zippy TikTok, I was talking about this yesterday. I'm 67, and is a reverse mortgage a safe loan?
Sometimes a reverse mortgage is the best move. Sometimes it's not a good move. You need to actually sit with somebody that understands it. If you have kids and you want to leave them something, that's something to factor in. The salesmen that sell the reverse mortgage make it sound like it's amazing. And truth is, it's good in some areas, not good in other areas, but you should factor all of them.
Well, I'll be honest with you. I've saved a lot of people's lives, or helped a lot of people's lives.
We have helped a lot of people with reverse mortgages.
Jesse Kreites?
Okay, cool. Kreitz.
It's hard to get an additional mortgage for a home loan if you plan to rent your current home. Is it hard?
No, it's actually pretty easy. Jesse Kreitz. Jesse, if you lived in your home for more than 1 year and it was FHA, well, then you fulfilled the requirement and you can move forward and get a conventional. If your first home was conventional and then you decided, hey, I'm just going to rent that out and I want to get a primary residence, keyword, primary residence. Could you go FHA? Could you?
Yeah.
Let's do it.
Ryan, so if I get a $10 million house and rent out 5 of the rooms, can I use the income to approve me? I love these dreamers, man.
I know. Dream, baby.
I love dreamers.
You're going to dream
Love
big,
'em.
man. Dream big. Dream
Love 'em.
big. I love that stuff.
Mario
Cool.
G, how much would my monthly payment be for a $450,000 home in California? Mario G.
450,000.
Yeah, man.
Shoot. I would say you're probably starting somewhere in the, and it's going to depend on tax base and stuff like that.
In today's rate environment, a
Today's
whole
rate
lot of going on,
environment.
guys. Whole lot going on.
3,900 to 4,700, somewhere in that range. 3,900 to 4,700.
Mitchie.
Yeah, somewhere in that range.
Mitchie B, 42K salary, 650 credit score, 250 monthly debt. How much can I get approved for?
42 salary. Well, a lot of it's going to depend on tax base where you're buying. If you're in Texas and the tax base is 2.9, it's a way different answer. So, cool.
Fernando, if an LO says 20% down is not needed for an investment property, would 5% work?
That's cute. That's very cute. Yeah, Fernando, dude, if you're dreaming, I don't know if is that the guy who's asking $10 million questions?
No.
Okay. So, investment property. If you're getting an investment property, it's going to take minimum, the best I could ever do is probably 10%, but you're actually doing 20%. You're doing it 80-10-10. 80% conventional conforming or high balance or jumbo loan, 80%. You're putting 10% of your own money, and then you have a 10% second. So that's 80%, 10% borrowed, 10% down. Technically, you're only putting 10 down, but the conventional conforming is doing 20% down. So it's called an 80-10-10. We do those. But 5%, come on.
Yeah.
Come on. Anyway, moving on.
Easy Y. If you're 100% service connected, you can qualify for a tax exemption on your property taxes for your primary, right?
Easy. No, not entirely. Some places, yes. Most places I've seen in Texas, yes. In California, it depends on the county. The counties give you, like San Bernardino County and Riverside County, give you a discount. It's a substantial discount, but it's not 100% exempt.
Luis Torres, how long does it take y'all to build a file?
Luis, if you gave me all the documents at, what time is it now? 12 o'clock? Wow, we've been here a long time. So if you gave me all the documents at 12 o'clock and you said I want to be in escrow by 3 and you were serious, I could build it for you by 3 probably. 2 hours. 2 hours.
Ryan, I need a loan officer that can beat down a realtor with a stick.
Oh, wow. Yeah, we don't beat them down with a stick.
What bank can we send them to? Ben, okay, sure.
Cool.
Matt Briley, what's your production 2023?
Oh, here we go.
Zam Jungle X. I'm Hello, love listening to you guys.
We appreciate you. Hey, all loan officers, we're actually here to help you guys. You're going to find out, Zamo X, that we get loan officers coming to shoot at us. I don't know why. I do not know why.
I don't know.
I don't understand it.
I don't know.
I'm actually trying to help them.
They must not have any files to work on.
I don't even kick them off the comments. I go in once a day and check the comments, and unless they're being blatant, if they're like, hey, DM me, check me, I'll block them, and they're gone. But if they're just saying, hey, this is the guideline, I know there's a possibility this guy could go to the other LO. I'm okay with that if you're actually helping my client base. I'm okay with that. Some of the LOs come out at, hey, your production is this. Hey, you guys suck. You don't know anything. You work for a direct lender. You know nothing. And I'm like, no, that's not true. I'll bring it all out right here in front of everybody. And I'll even teach you the dirty parts of the loan business. This pisses off a lot of loan officers. Pisses them off. I'll tell you about it a little bit more.
Not to mention, we got people like Ryan in our feeds that are just backing us up 100%, so watch out.
Yeah.
Ryan says, Matt Briley, more than you.
Oh, shit, here we go.
We got our boy in here.
Yeah.
You can't do it,
Yeah,
man.
yeah,
You can't beat
cool.
us.
Anyway.
Warning, low battery. That's a good one.
All right, excellent.
Ex-husband deposits money to my account for our 2 kids via his direct deposit. Can I use that as, I'm going to assume...
Income. It says income, yeah. So, warning low... Dude, don't move it. Warning low battery. Here's the good news. If he deposits money into your account through direct deposit and it's court ordered, has to be court ordered. Absolutely, I can use it. Absolutely. Let's do it. If it's voluntary, that's going to be a problem. So what you need to do is you guys have to write up an agreement, go to a court and say, hey, judge, we both agree to this. Can you stamp it? Once he stamps it, you can do it.
Alexis, how do you become... Wait, hold on.
Okay, cool.
We got about 10 minutes left, guys.
Okay,
we
cool.
have to rapid fire this.
Okay, we're gonna start rapid firing just a minute. Here we go. How do you become a perfect file? Okay, cool. Alexis. Okay, Alexis. Real simple. You have to have an 840 FICO score. Pretty simple. Do that. Cool. Next, you have to have probably, if you're buying a $500,000 house, about $250,000 in income. Do that. After you do that, it has to be W-2. Do that. Next, you have to be putting 40% down. 40% down a $500,000 house. It's a lot of money. So now you're a perfect file. We want you. Bank of America wants you. Wells Fargo wants you. Everybody out there wants you. You're going to get the lowest possible rate out there. That's a perfect file.
That is not rapid fire.
Okay, sorry.
Matt and Ryan.
Oh, here we go.
Matt, deal with my
Here
Ryan.
we go.
Matt has to deal with my Ryan. Mario G, how much monthly payment on a $450,000 home in California?
How much more? I think we covered that one. Around $450,000. The sum we're going to be $3,500, 38, 3,900. Yeah.
For Jen, I want to purchase a home and open an assisted living facility. What do you think about that?
Oh,
we're doing one right now.
We actually have one that we're doing that right now with. It's amazing. This person is wicked smart. I really like this person. Yeah. Wicked smart.
What interest rate could I get with a $150,000 down and 721 credit score?
721 is going to give you the best out there. But I'm also going to tell you something very important. Right now, my bank is running a promotion. I don't own the bank. I work here. But they're running a promotion that if you got in today, and let's just say we got you at 5.5 today. We got you at 5.5. For the next 5 years, they will refinance for free. Now, it's not free. There's still going to be closing costs and stuff like that. But they won't charge you the bank fees. So if they don't charge you the bank fees, you're going to get away for really, really cheap refinance. This becomes, as we call a strategic refinance. Get in right now, refinance within the next 5 years, you're golden.
That's not rapid fire.
Dude, I'm trying.
$895 for 2 homes plus 1 apartment on 14 acres. Do always look at a second home plus apartment as possible income to be qualified?
As long as it is permitted and a legal unit, yes.
Ryan, what's the equivalent to your realm, brother? Please make different bips.
Okay, next, whatever.
What interest rate could I get with 150K down, 721 credit score?
Well, the best interest rate that New American Funding is putting out right now is 5.25 on a 15-year fixed, 5.5 on a 30-year fixed. That is not your quote. We will need to pull your credit, build your file in order to do your quote. Cool.
Double B, can I get a first-time home loan with 500 score and bankruptcy discharge?
Maybe, but you better have a lot of money down payment, and that bankruptcy better be over 2 years old.
All right. I think there's a question about if you can do loans in North Carolina.
Yes, we can. North Carolina, every state except New York. Bring them over here.
Brandon got pre-approved for a VA loan with a 5.9 rate. Is that a decent based on averages? Question mark.
Brandon, let us compete. You know what? We'll make your lender. You might still stay with your lender. You might still. But if not, right now, New American Funding is putting 5.5, and you got 5.9. That 0.4 could translate into $200 to $600 a month. That's a lot of money. Let us compete. If we lose, so what? We lose. You get the best rate.
Harrison Bakery, can I get an FHA loan on a loan with a 524 credit score?
Probably not unless you got a gigantic down payment.
All right, let's jump to
Dude, we're trying to rapid fire.
Can
Facebook, Instagram, TikTok, and YouTube. Thank you very much.
How can I contact y'all?
Oh, good question. If you need a badass loan, you dropped it over there because you're a badass. If you need a badass loan, you call your badass loan officers at New American Funding. You can reach your badass loan officers by screenshotting the numbers that you see right on the screen, because it's going to disappear in 5, 4, 3, 2, 1. Special effect engaged.
I'm 1% Native American.
Congratulations.
All right, brother.
Cool.
I have you guys on the back like a podcast while I'm working.
I appreciate you, Zammy.
Yeah,
We're trying to teach you, man. If you're a new LO, respect. It's a very difficult business. Most important thing you can do is find a good mentor. Find a good mentor. Don't chase the bips. Don't chase the 300 payouts. Don't chase any of that stuff till you actually understand the business. Work some side on the broker, some side on the direct lender. Choose the right thing, because it's a long game, not a short game.
Can I SSI payments for income?
Yes. It depends on if it's permanent. If it's temporary Social Security disability, no. If it's permanent, yes. Simple. Cool. You know what? We've been Chris and Lee. We appreciate you guys. We'll be back.